Digits just guaranteed 95% automation on your client's books, or you don't pay. The same week, Perplexity gave every one of your clients a free personal CFO. And Anthropic quietly passed OpenAI to become the highest revenue AI company in the world. The walls between vendor, tool, and practice all moved visibly this week. And if you're running a CAS practice, like I am, every one of these stories lands in your P&L. So let's start with the squeeze, because that's what this is. On Monday, Digits announced an outcome-based pricing model for accounting firms. Here's the deal. If Digits doesn't automate at least 95% of a client's transactions with zero human touch, the firm doesn't pay. Their reference client, a top 400 firm at 10 million revenue, went from 75% automation at the start of 2025 to 98% by year end. 2% human touch during monthly close. That's not a pricing story. That's a staffing story. The same day, Perplexity launched a Plaid integration across more than 12,000 financial institutions, checking accounts, savings accounts, credit cards, and loans, and branded the whole thing as your financial CFO. Free, read-only, available to every signed-in account in the US or Canada. Your client can now watch money move across every account they own and ask questions about it in plain language without calling you. These aren't two separate stories. They're two sides of the same compression. Digits squeezes your firm from the cost side. Why are you paying bookkeepers for the work the platform now handles? And Perplexity squeezes from the client side. Why is your client paying you for visibility they now get for free? If you're still selling monthly bookkeeping packages priced around bookkeeping hours, both of these numbers just got harder to defend. Now here's the part I want you to sit with. Digits isn't just the threat. Back in October, they launched Digits Connect, a free GraphQL API that exposes their entire autonomous general ledger to anyone who wants to build on it. No partner fees, no marketplace lock-in. The opposite of what Xero and QBO are doing. So Digits is either the platform that eats the mid-tier CAS practice, or it's the one that lets you rebuild on top of it. And it's probably both. Now, if you're in Canada, like me, you don't get to find this out yet. They're US only, though they do say they're working on it. On Thursday, we're going to dig into the economics behind this a little bit more. What your practice actually sells when the platform handles 95% of the work. So make sure you stay tuned. Now then on Tuesday, EY rolled out enterprise-scale Agentic AI inside Canvas, the platform running 160,000 audit engagements across more than 150 countries. 130,000 assurance professionals now have AI agents in their daily workflow, processing against 1.4 trillion lines of journal entry data a year. Accountancy Age called it a watershed moment for audit quality, which is unusually strong language from the trade press. Now, we don't cover audit here, but the scale is the point. Institutional resistance, that line every CAS owner falls back on when the AI conversation gets uncomfortable, just cracked in the most regulated corner of the profession. If EY can deploy agents across 130,000 people, that line gets much harder to hold. And here's where it gets personal. Modus just raised $85 million to answer the question you don't have EI's budget to answer for yourself. Lightspeed led the round, Gary Tan co-invested. Modus isn't selling audit software. They're investing in and partnering with audit firms, basically buying them out and beefing them up, deploying their AI practice inside them and compressing the delivery cost. Their first acquisition is a top 200 firm with more than 30 million in revenue. This pattern is coming to CAS within 12 months. The acquirer landscape now includes software-first buyers with very different margin expectations than you're used to. Now, there's a tail to the Perplexity story that's worth naming. If a sole proprietor can get cash flow visibility and spending analysis from a free AI agent watching their bank feed, What exactly are they paying an accountant for? Now, this isn't hypothetical. In New Zealand, my home country, Henry has been eating the sole trader market with a model. 1% of gross, capped at $1,500 a year. It calculates, withholds the taxes, and files the taxes based on your bank feed. Now, the Perplexity option isn't there yet, but filing is the next obvious step. Now, here's the honest read. That $50 a month bookkeeping client, the one you haven't put your fees up in years, it was never profitable anyway. Those clients will migrate to AI native tools over the next 24 months, whether you're ready for it or not. This isn't the trend accelerating. It's just the trend becoming visible. Now, while everyone was watching digits and Perplexity, Anthropic's run rate revenue crossed $30 billion, up from $9 billion at year-end 2025 and $14 billion at the February Series G round. 3 times growth in 4 months. 80% enterprise. Over 1,000 business customers, each spending more than $1 million a year on Claude. For the first time, Anthropic has passed OpenAI at roughly $24 billion in revenue. Now, 2 product moves landed the same week. Microsoft 365 added Claude as a first-class citizen across every paid plan. Read-only access to Outlook, SharePoint, OneDrive, and Teams. The procurement conversation about whether your firm can use Anthropic tools just ended. And Claude Cowork moved out of research preview into full general availability. Now, OpenAI's response was a new $100 a month GPT Pro tier slotted between their Plus and Pro. OpenAI is just reacting to Anthropic now, no longer leading. That's new. And maybe you should think about building accordingly. And a few quick hits before we close. Tech layoffs have hit over 78,000 year to date. Almost half attributed directly to AI and automation. Oracle alone cut 20 to 30,000 roles in a single announcement. OpenAI bought TBPN, the daily tech talk show, for a reported low hundreds of millions of dollars. Now, when AI companies start buying the outlets that cover them, the question of who frames the story gets quietly answered. And Meta launched Muse Spark, their first closed-weight model out of their superintelligence labs. If you've been assuming open source AI is a permanent escape hatch, well, that door just narrowed. Every story this week is about the same thing. The wall between vendor and tool. The wall between firm and client. The wall between audit firm and platform provider. The wall between the CAS practice and the capital that wants to buy it. All 4 moved visibly in the same 5 days, while the rest of the world was looking elsewhere. The practices still standing in 12 months will be the ones doing the uncomfortable work of redesigning around what AI makes possible, not the ones bolting it onto what they already have. And if you're not sure where your practice stands right now, well, that's the first thing to figure out. Now, you could take our free AI Readiness Scorecard. The link is in the description. It's 25 questions, takes about 5 minutes, and you'll know exactly where the gaps in your practice are. That's where the work starts.